and welcome to TQ Talks, where we talk taxes and tax-free living 365. Here are your hosts, Craig White, Sebastian Singh, and Patrick Augustin.
And we're back with another TQ Talks. 2023 is here, and we are, again, full swing tax season. Excited, kind of.
As always, welcome back. Thank you guys for joining us on whichever platform you're hearing this on, YouTube, podcasting platforms, Facebook, Instagram, Reels, TikTok, wherever you guys are hearing us.
Sure.
Thank you for joining us again today.
If you don't know who we are, let's go through that. I'm Craig White, and with me is, again, my esteemed colleague, Sebastian Singh. PWD is not with us today. You guys
not tonight, but he's always with us in spirit, for sure.
He's doing daddy duty right now.
Shout outs to Pat.
Yeah. So if you don't know, we are a tax and advisory firm. Our job is to help our clients to pay the least amount of taxes possible or to increase their refunds using all the wonderful tax planning strategies that we incorporate throughout the year. We also help our clients to increase their wealth by giving them little known strategies through life insurance that they could actually utilize now. That's right, people, now or again in the future or for their heirs. So let's get right to it, right? It's, what are we in, February?
It's February. We are smack in the middle of tax season.
Which means the IRS is now processing earned income credit and child tax credit. Wonderful return, since everybody's probably like, oh my God. Well, our clients aren't really like that for the most part, but other people, I'm sure, are like, oh my God, my taxes, where are they? But
yeah, we found a lot of ours have been quite understanding of all the situations thrown at them this year.
Yeah, and every year. So the topic today is one that we talk to people about a lot. We do a lot of small businesses. You guys know that's our area of concentration, corporations, et cetera, et cetera. So we're dealing with 1065 partnerships, sole proprietors. We were single member LLCs. And of course, the partnership just means you have more than one member,
right?
C Corps, S Corp, whatever the case is. So at the end of the day, there's always the question, especially on the corporate side, when are my taxes due, right? Which is the March deadline or the April deadline, depending on how you are. And personal as well. We have the April, quote unquote, I'm going to say it like that, 15th deadline this year, 2023. It is April 18th because I think just like last year, it landed on like a holiday, so it got moved, or the weekend, so it gets moved back.
Yeah, it always gets
to the following Monday, Tuesday, whatever it is. So it's the 18th this year, just to make sure we're clear. But that brings us to our topics.
That also doesn't change, by the way.
What do you mean?
Regardless on what day it is, whether we, the people, get an extra 3 days for April 18th.
Yeah.
It's the same situation. If it was April 15th, a ton of people are coming in at the very last minute. So we're trying to push this out to you guys or get you as much information ahead of time or just stay in your ear to make sure you guys get your filings in earlier than normal.
If you come to me, Craig White, after April, let's give you the 5th, I am doubling whatever your fee is.
We are still going to take care of every single one of our clients.
Sure are. Double.
You will get the
double
utmost attention
special
and information.
Double the attention.
We will talk about the filing fees, depending on the situation, since each situation is completely different.
Doubled whatever it ends up being.
Today, we are here to avoid all late fees and penalties associated with our filings,
right?
But more specifically to when we owe our money and if we miss our filing deadlines.
Right. So the two things that always come up, well, what happens is people seem to have a misunderstanding about when, like we say, hey, we're going to file an extension, right? We do that automatically for our corporate clients or whatever the case is. But people, personal as well, seem to think that once we file an extension, it exempts them from any penalties. And that's what we're trying to make sure that we touch on today is like, hey, there's two things going on that you guys need to, really three, but two things going on that you need to understand. There's a failure to file. Right. Sounds logical. You didn't file at all.
Right.
We're going to get to that. And a failure to pay. That means you're going to file. Maybe you did file. And the fact that you filed, you owed money to the IRS and you didn't pay it because that April deadline or whatever deadline, if we do extensions or whatever, but we're going to stick at April. April 18th this year came, or 15th and the other year comes, and you did not give them their money. So again, the misunderstanding is that people think at the end of April comes in and 15th and, I didn't file. That's only a deadline for those who owe. Should we repeat that? It's only a deadline.
Correct.
For those who owe.
Right.
Right.
All right. So now we owe. Mm-hmm. We file an extension.
Uh-huh.
We know we're going to owe. We file an extension. We're protected, right?
No. That's the point. So we have avoided the failure to file penalty, right? FTF, failure to file penalty.
Because we're telling them we're going to file.
We're going to do it.
And when we do file,
we owe you money.
Right.
So the IRS is saying, thank you so much. Thank you for telling us that you're going to file. We're going to wait because we don't know what's going to happen.
Right.
But when they see the tax return come in whatever, July, August, September, maybe October, depending.
Yep.
And they say, wow, you owe money? Well, guess what? We're going to tax you. Right? Penalties, interest, because you did not pay us. And that deadline is repeated in the beginning, that April 15th normally, but now the 18th for 2023, repeating it, is for those who owe. You owe money. You got to give us our money on time. That's what the IRS is saying.
Not only on time.
All of it.
We want it all, and we want a little extra because you were late.
Yeah. If you get the penalty, agree.
Right?
Agree.
So if you file late or if you don't pay your liability by the 15th, you're going to get your penalty.
Yeah. So the other part before we get into all these percentages and what it means is, guys, if you're getting refunds or you assume you're getting refunds, you have up to 3 years to file your taxes, right? So if you're going to get a refund, it doesn't matter. As long as it's within 3 of the tax years, I say it like that because, it goes back, then you can file every year and get it. Now, once the 3 years are gone, the IRS has no obligation to give you your money. So if you're coming in with 4 or 5 years worth of returns and I tell you, hey, you got $2,000 coming from 15, 3,000 for 16, 17, you're not going to get it. I'm telling you that right now. It's not going to happen.
They're hanging on to it.
They're like, thank you. No, that's your business. But if you owe them, they're going to check on interest, penalties, late filing, all the rest of that for all those years. And it's going to add up to be a whopping bill, depending on
from the deadline, right? So you brought up 2015. So it'd be April 15th or whatever that day was that year. Of that year, interest per month. On top of whatever you owed them initially. Up until today's day.
Carrying forward, all the way up. So it's gonna be a doozy, which is why they're stressing you to file on time. So let's touch on what failure to file, I guess. Failure to file penalty. So failure to file, as we spoke about before, it just means you did not file your tax return on time. That we're assuming that you owe, right? If you don't owe, this is non-applicable.
Right.
If you owe, and again, so people say, well, how would I owe? Okay, well, W-2 people. The biggest thing is we see is, I exempted myself for 4 months. You don't have kids, you don't have nothing. You're going to owe. If you're a 1099 subcontractor, that means that all the money that's coming to you is what? Tax. You didn't
tax free.
Tax free. You ain't paying no taxes.
Tax free.
No Medicare.
So if there's no reconciliation,
there's nothing
that wipes that out, then you're going to owe, period and point blank. You didn't pay not $1 in taxes the whole year.
Right. And what he means is, listen, if you made 30 grand on 1099 and you don't have 30 grand worth of taxes to get you down to zero, you're going to owe something. So those people are the people we're talking about. You can't say, hey, I'm just going to file an extension and thank you, Sebastian, we'll get to it later. Okay. But guess what? After I get all the expenses and we're running through and trying to get you, my job then is to try to get it to the lowest possible place I can, but you're still going to get interest and penalties.
On that number, right?
Yeah,
whatever that
no
ends
choice.
up being, whether it stays at that 30 grand or we get it down to whatever's next.
Right. And I don't know what the amount. So the failure to file, is that what we're doing right? Failure to file penalty.
Failure to file is like what we said already.
Right. 5%. I was just trying to go over the
percentages,
numbers, right?
Oh, okay,
it's 5% of your balance per month, up to 25% of your unpaid taxes, right? And so, again, it is what it is. It's 5%, and it's pretty much similar to the failure to pay penalty. And we'll jump into that and give you guys an example of that, which I guess is, it is what it is. So failure to file, and now failure to pay. Again, you owe the money. You filed, I guess, or you didn't file, whatever, because you can file and still get failure to pay. So let's say you file your taxes. You realize, hey, I owe X amount of dollars, and you didn't do a payment plan, 9465, with them or with us or whatever, and you also didn't pay anything, do a voucher, you didn't do anything at all, right?
Nothing, no good faith, no nothing. Yep, nothing.
Then it's failure to pay. You didn't pay them their money. So here comes the penalties and interest. And, again, as it talks about, this is all generally assuming that the 15th or 18th this year, whatever, is the date that you had to do so. So extensions, again, do not save you from failure to pay. That's
failure to file.
Yes, but
failure
not
to pay. Failure to pay.
Right. Two different things. And so the failure to pay penalty says, which we're reading for you, is the penalty ranges between 0.25% to 1% of the unpaid or outstanding tax amount. For example, if you owe $5,000 and your penalty is 1%, that equates to $50 for the month, right? Ultimately, the total of the failure to pay charges can amount to up to 25% of your balance. So it can skyrocket. Right. So the question then becomes can I have a failure to pay and a failure to file penalty at the same time?
All right. Now that's tricky, right? Because saying at the same time might mean the same return, but if they occur the same month, then no.
Okay. There you go.
The failure to file gets canceled out.
Okay, yes, right. And I think it's like limited at...
Excuse me. And it's limited up to, I forgot what it was. I think it's like 5%.
Right. So that means, and Sebastian explained this as he read this, is that in other words, if the penalty interests are fighting each other, the max they're going to give you is 5%. So again, the bottom line is you're not going to get double tagged. They're just going to pick, I guess, the lesser of the evil or the greater of the two, whatever it is. Right. But either way, it doesn't exempt you from, you filing extension does not stop the penalties from coming in. Again, failure to pay penalty is still going to be on the table for you. And the last thing we were talking about.
You're going to get hit. They're going to find you.
Yeah, I mean, it is.
I do want to say what Craig doesn't care for me to say.
Oh, yes. Yeah, talk about it.
There are special cases when the failure to pay or failure to file, whatever the case is, that IRS will work with you, but realize that is a very, very specific case-by-case process, and they don't have to do it ever.
No, they don't. And we always save abatements for, like, real things, it's called a one-time penalty abatement, and it's sort of like, do you want to? Do you really want to? First time, thank you. Do you really want to waste it if you're going to owe like $1? Like, bump that. If you never used it before, I'm not going to waste it on that. So yes, I just didn't want people to get excited.
Right. And to Craig's point, because it's called a first-time abatement, it means the first time you're using it.
Correct.
Not that you have to use it the first time you file for said business or whatever the case may be.
Because they do ask you, did you ever use it? Look it up. And they say, no. Okay, cool. And that's pretty simple. Then the last part of this whole thing, and we'll get out you guys' ears, so hopefully this helps, is the underpayment penalty, right? Which is something I think people skip over. And truthfully, because it just doesn't hit you that hard.
Right.
God's willing, you don't owe $1 million. But the bottom line is, if we do the taxes, you owe some money, and everything is fine. You're filing on time. You're paying on time. At the bottom of the tax return, it actually usually lists underpayment penalty. So usually that applies, and I say it backwards. That's what Sebastian tells me. I say to people, if you think you're going to owe over $1,000 when you file your taxes, that means you should have been doing estimated tax payments throughout the year. We'll do another podcast on estimated tax payments because that's important. And then it helps you to bring your balance under that $1,000. So that way, when you come to file, you say, oh, wow, I've paid in XYZ and I only owe $997. Great. You avoid the underpayment penalty. But if you don't, then they charge you. But it's minute.
If it's over $1,000, then they're going to charge you.
They're going to hit you.
Under $1,000,
they leave you alone. And I think the other one you read was like, that's your thing, the 90% of your full value of blah, blah, blah. I never even cared
It was a flip-flop. But the basis of it is pay your tax throughout the year if you think you're going to owe. If you end up owing less than $1,000, then you're fine. Right. They're not going to charge you extra. You still got to owe that money.
Yes, you're going to owe them.
Over $1,000.
It's very small.
There's also a penalty on that, but like you said, it's very small, and it all depends on your balance as well.
It does. And the other part to that, I think, like I said, for the underpayment penalty was if it's 90%, if you have paid up to 90% of what you should owe, and you're caught up on all your taxes type of thing, like everybody's up current, then they're going to say, cool, we're not going to stress it. Right. We're not going to bother you. And there's a whole other thing. It goes whatever formulas, but we're going to leave that alone. But at the end of the day, guys, the bottom line is there's penalties for everything. That's how the IRS makes extra money. So if you're going to file your taxes, try to file on time. Again, we naturally do extensions for companies. I don't really
we
do
just
it for
push
people,
them out. Yep.
Right, unless they tell me. But that's the normal run of it. And the other part of it is, remember, at least people that are S corps or being treated as a tax as an S corp, their companies do not pay tax.
Right.
So the extension really is just to avoid the failure to file. Right, because there's not going to be a failure to pay, because that stuff goes on to their personal. The C corps, however, they have that.
They have to pay.
Right? So that's what it is. So again, We know it's early in the tax season. Theoretically, it's February, but we are trying
we're smack in the middle. I don't even know why you're trying.
I don't know about a middle. We got April. We got 2 months. So
yeah, we've had a couple weeks. That's it.
We got 2 months. At the end of the day, we just want you guys to be encouraged to take the information and pass it on, to at least listen and say, okay, cool. Now I know something different. Let me explain that to my friends or my family, and help people to understand what's going on. Just don't take it for granted. Oh, look, did you file the extension? That's the end of it. And everybody's celebrating. Understand what it means. Again, not the ratios and the numbers and the penalties and what the fees would be, but really, hey,
just the concept of it.
That's it.
Yep.
That's all it is.
If I file an extension and I owe money, I'm going to owe a little more because they're going to hit me with the interest and the charges.
That's it, man. So we hope you enjoy. We hope it was helpful as always. Somebody told me not to say that. So it's helpful.
Yeah. Not right? that no, we hope. We know it is.
We know it is. So at the end of the day, use the information that Sebastian keeps banging on our desks, right? To your the best of your ability. And if we can help you answer any of the tax-related questions, you know our number is 800-413-1456. You can email us info@tqfinancials.com. Same thing, or tqfinancials.com. You can go to TQ Financials on our website as well. If you have anything for us, let us know.
Please like, comment, share, ask us questions. Reach out to us, DM us, put it in the comments, whatever it may be. We're going to try to stay on top of it. And as Craig already said, please, if this has helped you or you think it could help somebody else, share it. Let's get this knowledge out there to our circles.
Thanks for your time. You can find us, as Bassi always says, on all your favorite
podcasting platforms.
That's right, baby. Look us up, like us, follow us, etc. And shout out to Pat, who would say, all right, peace, baby.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.